Welcome back, everyone, to the Property Journey podcast, episode 37. Welcome, Roy.
Afternoon, Chris.
Big episode this episode. We're going to be discussing the autumn budget 2025. This is a little preview, a kind of discussion between ourselves about what potentially could happen. We're obviously going to be slightly in the dark until 2 weeks' time. I'll forget my date right. It is the 26th of November.
That's right. We'll be watching that day closely.
As to what's going to be introduced, what's potentially not going to be introduced. But at the minute, what we are going to be discussing is speculation. So for anyone that is listening, just make sure that this is all what is being discussed about what potentially could happen rather than anything concrete as it stands. So, I've been glued to the news, Roy. I was even on listening to our Chancellor, Rachel Reeves, even as much as this afternoon. Radio 5 Live was in the number 11 Downing Street with her, discussing some of these changes, or trying to at least get some of the changes out of her. In true politician fashion, she deflected everything. So, big areas for discussion. Obviously, we are a property podcast. However, the effects of the budget can have a massive effect on everyone, not just anyone that's even owns property, owns a family home, invests in property, rents property, landlords, you name it. If you have property even attached to you, this is going to affect you in some way, shape or fashion. So the first bit that I want to discuss on then is the tax thresholds. So first things first is they describe it as the stealth tax. The reason why is it's not actually a tax increase. It is a freeze on the level at which you begin to pay tax. It's set to be frozen again and extended. So that basically is going to mean that more and more people are paying tax.
Yeah. Because what at the minute it's the first 12,500 approximately is completely tax free. So yes, as you say, if they don't raise that, and then everybody's income rises and inflation rises, then effectively you're no better off. Yeah. And they haven't raised that in a number of years, I believe. So effectively, then it means then you're still paying in a roundabout way more tax.
So anyone essentially below that level, with say for example even a small increase in your wage. If you're below that slightly, more and more people are going to begin going over that. Therefore, more and more people are going to be paying that tax level.
Like that level, I can remember 20 years ago, whenever you were a student job and coming out and you had a minimum wage, you were roughly making, even working full time all week, you were getting about 12 grand for the year, and you had little to no tax to pay. So it's effectively, they haven't changed that there for, there we go, 10, 15 years. But yet the level of tax that they're getting has just increased year on year on year.
Yeah. So we're expecting that as one of the things to be announced is the tax thresholds are set to be frozen again. That means more and more people are going to be paying tax then in the future. The big talking point is that in Labour's manifesto, they promised not to increase the big three, as they call it: income tax, national insurance and VAT. Judging by what I've been reading and listening in the last 3, 4, 5, 6 weeks, and there seems to be more news conferences and a sort of like a pre-budget talk about what potentially could be happening.
Throwing it out there just to test it.
Soften the blow, I believe. And listening even to today's interview, she basically says it is either a case of increased one of these taxes, whether it's all three, whether it's one, whether it's a mixture of increasing one, decreasing another, we won't know. But it was either a case of increasing at least one of them or cutting spending. So by coming out and saying that, we're either going to have a tax increase or there's going to be a cut in spending. The likelihood is there's going to be an increase in at least one of these taxes.
Well, definitely. Well, the VAT one, some of the papers and some of the articles I've been following, although they're not going to possibly talk about increasing VAT, what they're going to do is they're going to lower the VAT threshold. So at the minute, a small business, they have to basically bring in takings or have turnover of approximately 95,000 or something like that before VAT is chargeable. So basically all small businesses, that effectively means they don't have to charge VAT. Whereas there's talk of reducing that threshold from 95,000 way down to maybe 25,000 or 30,000. So that effectively means that every small business is going to have to start charging VAT. So if they start to charging VAT, well, that means their prices are going to go up 20% immediately. So that means even a small wee business owner who's then dealing with their customers, and whether they're high, middle or low end customers, well then the cost's going to go up 20%, and then the business accountancy fees are going to go up because they're going to have to do VAT returns every month or every quarter. So it's additional costs as well. So I think that would be detrimental. It could put a lot of small businesses in they could struggle, or it could wipe them out completely, which then just leaves the bigger multinationals to actually just step in and swoop up that work.
Yeah. And I suppose then, when you look even at income tax, apparently it hasn't been raised in 50 years. It would be a big step to increase that. Obviously, by doing so, you are going to be, there's obviously talk about whether or not it is going to be affecting the working class, is what they describe it. Because of the way that they might do it, might be aimed at the higher earners. But even at that, it's still going to have a knock-on effect. Higher earners doesn't matter anyway, because the companies and things that got there, if they're affected by it, there is going to be a knock-on effect right down the tree.
Well, a lot of what's happening at the minute, particularly at that higher end, is those who are on the threshold. What they're doing is they're actually working less hours. So the likes of doctors, surgeons, pilots is a big one, where basically they're reducing their hours, increasing their holidays purposely so that they don't go into that threshold even by £1. So that has a knock-on impact in that then that's creating a shortage of staff and shortage of workers, which then means those industries are then struggling to actually provide a service.
And I suppose then even the knock-on effect as well is that with, as you mentioned there, less staff coming in, but problems there can even arise with the likes of the national insurance contributions there for employers increasing. They're not going to hire more and more staff because of the increase in the contributions. So let's be honest here. We know that there has to be tax increases at some stage to battle, the shortfalls in public spend and things like that. There, we understand that, but it's such a balance between, increasing this and then completely cutting the rear end out of the market and growth and businesses.
It's the businesses that's going to get us out of this mess that we're in, but yet it's the businesses that's basically being hampered. I appreciate for employees, they're not going to be thinking like this and they're not going to agree with me, but every business owner at the minute is basically going to be glued to the TV in a fortnight's time because their hands are completely tied. A lot of business owners are going to be enthusiastic and want to grow a business, but they can't because they can't get staff. They can't get staff for a number of reasons. Most of them are linked to tax and staff shortages. And then what's the point in growing a business, because you're just going to be taxed more, i.e. taxed on your profits and then taxed on the staff that you already have. Like every business owner that I know in the last 12 to 18 months has basically put the handbrake, put everything on their business to stop it from growing, because it just is not worth the stress and the hassle and the fact of having to pay more tax.
Yeah. It's kind of, increase your business and, as you say, increase maybe even your profits for it to potentially actually be worse off for you because you're being taxed more on it.
Yeah.
Briefly discussing capital gains. It kind of fits in a wee bit with business disposals, things like that there. There was obviously talks about the rates being reduced the last time. It didn't come through. There was a bigger emphasis put on the farmers and the agricultural reliefs. So there's going to be, believe there's going to be changes then for business disposals as well. Capital gains thresholds are also set to be reduced. And obviously the rate of it could potentially increase as well. That would have a knock-on effect in terms of capital gains on property investments.
Yes, significantly for that. But years ago, it used to be each person, you could sell a property and the first £12,500 was completely tax-free, which was brilliant. And then that's been cut the last few years, and it's now down to only £3,000. So it may be the case that that's immediately taken out. So that means the minute you sell something, it's automatically taxable. So it's a matter of, do they increase that tax amount? And there's a possibility, I read an article where they're possibly going to be taxing or implementing it on homeowners. So at the minute, if you own your own house, your main residence, and you sell it and move house, the profit that you make on that house or the equity is completely tax-free. I read an article a few weeks ago that there's a possibility of bringing in a tax there. So that would immediately impact anybody moving house. So not only then do you have all your legal costs, your removal costs, your stamp duty and mortgage costs and all of that, now stick a tax in that as well. That's going to have a big impact.
So say, for example, and I'm throwing this out here just because maybe my understanding wouldn't be right, but say, for example, you pay your stamp duty and you pay your legal costs and all the normal fees that you would normally pay if you're buying and selling a property. Would you be taking that, I wonder, off the profit? Say, for example, say you made 30 grand, but your costings would be maybe coming in at, say, 27, 28, 29,000. Would it be then minus the...
Well, I don't know what way, if they are going to implement that, what's going to be the rules as a homeowner. But the way it works, very, very briefly, if it's an investment property, so basically they take the price that you sell the house at, they take the price that you bought it at. So that's immediately, that gives you, in simple terms, a profit. Out of that, you can deduct all your costs. So that would be your legal costs. And you are allowed to claim capital expenditure. So if you put in a new kitchen or fix the roof or new bathroom, those sorts of things, you can offset or you claim that, and then what you're left with, then that's what you're taxed on.
What the tax amount, because that's I was wondering kind of what way that would work in terms of your, because the last thing you would want to say, for example, a 25 grand stamp duty bill, and then the next minute then you're getting another capital gains bill that's maybe a 10 or 15 or 20 grand or whatever, because no one would sell their house if that was going to be the case. Interesting to see whether or not that would come through. Going to move on actually potentially where we'll maybe come up against some of them, but inheritance tax talked about very much so in the last budget, which we covered. Again, we're looking at changes to inheritance tax, where potentially the lifetime gifts rule, so at the minute it's 7 years, that potentially could increase to 10, or even an extreme was 14 that was being touted. Even that's a massive change.
It's effectively what they're saying is gift something away, but yet it's not gifted away. Will still count it as not. So the 7-year rule, a lot of the more elderly, more mature people always have heard about the 7-year rule. What that means is if you sign over a property or land and you pass away within 7 years, HMRC then treats it as, well, that you still own it. Now, fair enough, once you get into a few years into it, the amount of tax then is reduced. But if what you're coming across there, if they're going to implement that, so that means you're going to have to, there's a risk for 10 years that if a parent passes away, that there's going to be a tax payable. It's just crazy.
And let's be honest, 7 years is a long time as it stands.
It can be, yeah.
Never mind 10 or 14, doubling that up again. If you're at 64, 65 years of age and you take 14 years even just from that date, you're at 79.
Yeah.
You know, which I'm not saying is old, because in current day and age it's still considered quite young.
But the balance of probabilities, yeah.
You know, it's like 14 years is a long time, and as you say there, are you really gifting it then? You know, at 14 years, is there? You know, you are running quite a substantial risk. The other point that I did have down was that the agricultural property relief, big debate about it in the last budget. We are now in November 2025. That was announced in October 2024.
Mm-hmm.
And the changes are set to come in April 26.
Mm-hmm.
So still, obviously, that is overhanging. I know there's been a lot of debates about it. There has been a lot of backlash about it, especially in Northern Ireland itself.
Mm-hmm.
Are we expecting changes to that, or are we expecting just this is how it's going to be?
I'm normally very positive about everything, but I honestly feel that they're not going to backtrack. Mm-hmm. They're not going to backtrack on that, because it's like anything that was a big change. It's now filtered through. People have had time to think about it, and oddly enough, a lot of people are just burying their head in the sand and not doing anything about it. So I honestly feel that they're not going to change it. And if anything, if they do, they might increase the threshold a wee bit more, mm-hmm. which will still soften the blow, but it's still nowhere near as beneficial as to the way it was for generations there, where all agricultural and all businesses were completely exempt from inheritance tax.
Yeah. There is a possibility as well of tightening on reliefs in terms of inheritance tax. There's also potentially going to be limits or caps on lifetime gifts as well. So again, it's going to be an interesting day to see what's announced. It's going to be an interesting read to go through the 70, 80, 90 pages of the nice wee red brochure that they release. If anyone is wondering, it's usually me goes through it, not Roy, and then I come and give them a wee brief.
Summarised.
Property and wealth then is, you've already kind of touched there on the potential of capital gains being charged on residential homes. Or main residences, sorry. There is a potential to, let me get this right, stamp duty, ourselves and England is under the same one.
Yep.
Wales is slightly different.
From memory, Wales is slightly different, and Scotland's different.
Definitely different. There is a potential where the stamp duty could change, and it is then going to be completely new rates put in, new who qualifies for it, things like that there, a complete revamp of it. Essentially, if England does go ahead and do it, there's going to be a clear knock-on effect to ourselves then.
Yeah, well, I haven't actually seen much detail about that, but it's something that they've always maybe mentioned over the years of changing it, and it is something, I'd nearly go as far as to say nearly every budget here, they seem to be tweaking it in everything. They always play about with it. So I don't know what way they're going to come at it. I'm honestly don't know anymore. You can't predict it, but I'm being prepared that they're going to tweak or do something with stamp duty in some shape or form, whether it's a tweak in rates, a tweak in the band, or, as you say, even a possible complete overhaul.
Because, you know, we'll not say that house prices, for example, are continually rising. There is more and more properties heading into, you know, especially even, we'll take Northern Ireland, for example, heading into the 200,000 bracket. There's more now heading into the 300,000 bracket. There's plenty heading towards the 400,000 or 500,000 bracket. You know, the prices of housing now, for example, a £500,000 property could have sold 10, 15 years ago for 325, you know, and more are increasing, you know, up beyond the kind of what we would have described as normal levels. Yeah. So are they going to be, you know, as you say, with capital gains, things like that there, someone could have built that house for 150 or 200,000 and they're selling it for 600. Yeah. You know, that's where these big decisions are going to come in.
Absolutely.
There is talk as well, again, whether this is because it's going to be council tax. And again, they're bringing that potentially in with the stamp duty side of things. You kind of mentioned a wee bit there, but whether again this affects us with our own council kind of taxes and the way that we work things, it's slightly different in England. But they are talking about potential mansion taxes. You know, again, is that where the rates on properties is going to be changed for people that are living in properties that is described as a mansion?
Well, I know here, as you say, it's completely different between our rates and their council tax, but the way it works here, from memory, the value, if there's I'm not too sure, is it 400,000 of a value based on a value from the 1st of January 2005 or something like that, that if you are over a level, if it's worth more than that, then the rates are capped out. There was talk of possibly rising that. So that effectively means, yes, probably the higher end of the market are going to have increased rates. But thankfully, I think there's too much of a difference between their council tax structure and our rates. So I'll be a wee bit selfish and say, well, that may not bother us.
It might be more of an England problem than an
as our problem.
Yeah. But it's just, again, it's interesting to see whether or not the knock-on effects of this could potentially be kind of, well, we're starting to do it over here. We would like everyone in the rest of the UK to begin to implement something of a similar nature. We will never know, Roy, until 2 weeks' time. Pensions are getting a sore touch. And again, affects everyone. Everyone that's paying into a pension. Even when it boils down to the likes of someone putting money aside in their pension, potentially looking to go down the investment property route, things they got there. They are set to, well, first thing, they're set to reduce the amount that you can put into a cash ISA. At the minute, it's 20,000?
2025, I think it's 20, yes.
Was talked about being 10. I have seen people touting that it could be 5, which again is just completely wiping it out. Pensions for higher earners, again, for some people they will qualify for this, for some people they won't. It seems to be that higher earners puts lots of their wages into a pension to avoid...
It reduces their overall income.
Yeah.
So it reduces their tax, and then they were just basically nesting it away into a pension that they could access later on in life in a very tax efficient way. And also, if you passed away, it was completely inheritance tax free as well. But that's all been.
It looks to be
butchered.
Changed. Obviously, a number of things for business owners maybe listening to this. If there is a cap introduced and someone decides that no, they want to continue putting it aside, there will be national insurance, I believe. The contributions, employers' national insurance then is obviously going to be taken off that as well. So there's going to be a number of changes we're expecting in terms of pensions as well. And there's a couple of other ones, because we have to consider as well that if there's taxes being increased, the chances are they're going to increase their spending. So things like, for example, the 2-child policy for child benefit, there's talk of it being scrapped altogether. So if you have 3, 4, 5 kids or whatever, you will be eligible to claim child benefit. That means there has to be a pool of money then to be able to cover that. Hence then obviously tax increases. So things like that there. The other one I wanted to touch on then was partnerships and the LLPs. Business
partnerships. So I don't quite fully understand LLPs simply because I don't have one myself. Don't have a tax structure like that. But at the minute, my understanding is that yes, if you have that structure, there's a reduced or lesser national contributions. So LLPs would be very common for maybe property businesses, for solicitors and for accountants. So that'd be very common to be set up in that structure. So effectively it's trying to hit probably markets where they think that they can effectively extract easy tax.
Yeah. Because, are they kind of going down the route of professionals, where they probably believe that there is a higher value, or there's more money coming into those types of businesses or partnerships, and hence then we'll claw a wee bit of money back off that.
It could be the matter, a lot of partnerships used to move to a limited company structure, and then I suppose that happened quite a lot. There was a lot moved to that structure, and then that's settled. So it could be, I think the Chancellor just simply looks at where's the avenues that people aren't moving and there's no tax, and let's just target it. So hit every profession, and there we go. They haven't moved to a limited company, so we haven't been able to extract tax there. So let's hit them.
Funny, it's not on my sheet, and I knew that there was something else that I'd picked up on, was for all you people that are driving electric cars.
Yes. I'm not a fan of them, so.
And also the hybrid models as well. So obviously with the reduction in people buying fuel,
yes,
they're obviously losing out on fuel duty. Therefore, there was, and I really don't know how they're going to calculate it, but for every mile that you drive, it's going to be 3p per mile or something along those lines. And you have to then average what you expect to drive in the year, pay whatever that average is, and if you're either a shortfall or you didn't drive as many miles, then there'll be a credit on your account, and it'll be a slightly lower rate on hybrid cars because they're obviously still purchasing fuel using a wee bit of a electric. But it really is kind of, it seems like, where, as you mentioned there, where are we losing tax, and how can we then claw that back?
I don't feel it'll go down that avenue, but they'll definitely tweak the tax on it. For years there, it used to be, as a business owner, if you bought an electric car, you were able to claim well over 100% of the cost of it, which was really incentivized. And then you had no tax on a yearly basis, as in what's known as benefit in kind. But then they've been just reducing at that for the last few years. And then there was a scheme brought in that basically, if your company car, you could buy, in fact, not a company car, you could even buy your car through a scheme. It was like the Cycle to Work scheme, if you've ever heard of it. It was the same sort of thing, but buy an electric car, and then you got it charged at work. So as you say, clearly they could see, well, here's more and more people spending less on fuel, then their fuel duties going down. So how do I target that? So I could be wrong. I don't feel they'll go down that method of the 3p per mile and what have you. It's too complicated, but they're definitely going to hit the electric car market.
Because there is a subsidised rate, or a cut, in fuel duty at the minute, about 5p or so, and it is set for renewal as well. There is potential talk of that being just not renewed again. Therefore, that 5p is going to go back onto the price of fuel. Yeah. You own a business out there, you have lorries on the road, you have cars on the roads, you're subsidising people's fuel for travelling to work, whatever it happens to be. 5p onto every litre. It's a lot. It can soon add up, if you have 10, 15, 20 cars or lorries or whatever on the road. So the big thing then is what it means for people. So we're obviously we're obviously previewing this, we're discussing it beforehand. The budget is in 2 weeks' time. We're now sitting thinking, some of these things may happen. Mm-hmm. Some of them may be announced, and yet they might give 6 months or a year's period to go through. Mm-hmm. Some of these things might be announced, but they're just simply a white paper. Mm-hmm. They have no announcement date as to when it's going to come into force, but this is what their plan is. So where does it leave individuals at the minute? Is it, obviously when it comes to property, they're really going for it because probably the way inflation is going, the way house prices is going, and they're simply looking at that avenue going, this is where we want to get as much cash back into the government as possible. Inheritance then obviously comes in under that as well, because with property comes inheritance. Are they the avenues where people should really be thinking about? Not in their 70s, not in their 80s, possibly not even in their 60s. They should be thinking about it as early as possible.
The best advice to give would be everybody's going to get a touch here in this budget. As to how it impacts you, for some people, as you say, their cost of living is going to increase. But if you have any assets at all, whether it's property, even if it's your main residence, plus investment property, if you have land, if you have a pension, anything like that, definitely seek advice. As soon as the budget happens, if not maybe even before, because don't be burying your head in the sand. Don't be thinking, well, that's frustrating and that's annoying, and just get on with it sort of thing. No, maximize every opportunity possible. Yes, you're going to be targeted. Yes, you're going to be hit, but still try and take the best out of a very, very bad situation.
Yeah. Because it really is a case of, as you mentioned, everyone is likely to get a hit here. The general worker is probably going to get a hit here at some stage. At the minute, even interest rates are sitting obviously at the level that they're at. We've also got to be wary of, if this budget is not well received, there is a potential for interest rates to go back up again. Or potentially be cut, depending again what market sentiment is, how it's set to be received. There's going to be a topsy-turvy there with people's mortgages. If their mortgage rates are coming up for renewal, people's savings are obviously going to be affected by interest rates. It really is kind of back down to, I don't want to scaremonger here, but this is the reality of it, that when it comes to this time of year, a lot of people go, well, sure, that's a government thing. That's got nothing to do with me.
But no, you want to protect your assets. Interest rates, I'm going to predict that they're going to be, they'll come down again. That's why the budget date, in my view, was moved to allow the Bank of England release the interest rate for the month, hold it still, because if they dropped it and then they needed to drop it again, it loses its power effectively. So I think they've held it at the 4 now, being prepared that the budget may not be well welcomed here. The market's going to be in difficulties, and their way to kickstart and to try and control the economy is by dropping the interest rate.
Because let me think about it. If that's the 26th, you'd probably be chatting about a week later. They would be discussing what to do with the rates then. I think that's kind of really it. It kind of sums it up. Essentially what we're expecting here, folks, is an increase on pretty much across the board.
If you've only thought, if you've been starting to think about things here and you've kind of been putting them off, you've got 2 weeks to get speaking to solicitors, accountants, people who specialise in future planning effectively. Get speaking to them, and there's 2 weeks to maybe get a few things finalised beforehand. And if not, well then certainly as soon as the budget is announced, get booked in with the specialists and maximise what you can.
Yeah. Well, folks, we're going to be back in approximately 2 weeks' time to discuss what has actually been announced. So hopefully you've tried to enjoy this episode, and we'll be back with you again in a few weeks' time.
We'll stay positive. We'll be maybe being delightful and
you never know,
surprised and thanking
the increased spending or something on
absolutely.
I don't know what would even give us a bit of positivity, Roy. I'm not too sure. Anyway, thank you very much everyone for tuning in. Episode 37. That is our the autumn budget 2025 preview.
Thank you.